Good morning, traders. Welcome to BCR's daily market roundup. Today, we will be covering the US dollar index, crude oil, spot gold, and AUD USD, analyzing the market movements and key technical levels that happened recently, and covering the geopolitical and economic factors on the assets. Let's dive right in. Firstly, we have the US dollar index. The US dollar index held steady in the 103.00 to 104 range despite strong economic data. The Fed's stance on interest rates, with the expectations of two rate cuts in 2025, continues to shape the outlook. Chair Jerome Powell indicated a potential recession, though not imminent, and emphasized that inflation from tariffs would be transient. Technically, the dollar index is testing a short term descending triangle pattern with strong support at 103.18 and resistance near 104. If the index breaks through resistance, we could see a push towards 105, while support levels below 103 could indicate further downside. Now coming to crude oil. Crude oil saw some upward movement hitting $67.2 due to the geopolitical tensions and US sanctions on Iranian oil exports. However, the Fed's decision to leave rates unchanged could limit price gains as expectations of future rate cuts point to slower energy demand. Oil prices may face a correction after recent rebounds. Key support levels are around $66, and if broken, the next target is $65. Resistance is at $68 and $70. Oil traders should watch for any significant changes in the geopolitical landscape. On the other hand, gold prices retreated after hitting an all-time high of $3,057.5 as profit taking kicked in following the Fed's decision to leave rates unchanged. Despite this, geopolitical tensions and economic uncertainty continue to support gold's safe haven appeal. Technically, the focus is on breaking the 3057 level for further upside. The next targets are 3080 and 3100 mark. On the downside, support levels are at 3024 and 3000. Given the overbought conditions, a short-term correction could occur, but the long-term bullish outlook remains intact. Lastly, ADUSD weakened against the US dollar, falling below the key support level of 0.6300 after disappointing employment data. Australia's February employment change dropped by 52.8 thousand, missing expectations. On the other hand, the Federal Reserve's unchanged rates and hints of future rate cuts continue to impact the currency market. The AUD/USD technical pattern shows sideways movement with support at 0.6258. If this level breaks, further downside at 0.6200 is possible. On the upside, key resistance is at 0.6340 and 0.6377. Keep an eye on the key levels of this week. Make sure you stay updated with us. Thank you for watching. See you in the next video. Trade safe.